Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the MJ space. They're installing hardwood flooring in the background, so there's going to be banging and sawing and all that fun stuff. So, interesting day in the sector today. We had oversold bounces. I traded CGC. I added a lot of OH. We'll go over both of those. The US MJ space starting to show a bit of a shift. Again, it's time to be paying attention because when that shift happens, just like that, just like OH showed us, 10% in one day, it's going to happen quickly. So we have so many falling wedges across the sector. The definition of a falling wedge, or I should say the psychology behind a falling wedge, is breaking to lower lows in a downtrend and not getting notable follow through. That shows bearish and seller exhaustion, and it's a bullish reversal pattern that we see break bullish eventually. We've already had Cureleaf break bullish. Yes, news was the reason for the break. Now the question is, can other names break bullish from their patterns as well? And guess what? CGC is now in a falling wedge pattern. If we look at our downtrend resistance from the $52 level, and if we look at our support line, our downtrending support line, this is a falling wedge. You can see a tightening range, and if you were to put the upper wicks, it would look a little bit different. Again, depending on how you draw it, it's going to change the shape, but we could easily stay within this pattern for another few weeks, but we get to a flex point where we can't stay in this pattern. And we'll go over a bunch of other charts that are also in the falling wedge pattern, and it's just something to keep an eye on. Again, it's not an act now pattern, but it's something that tells us, okay, we're keeping an eye out for the sellers to exhaust themselves, and then we're going to be looking for shifts in momentum on the daily time frame and daily trend changes. So CGC oversold bounce today. I had no intention of playing CGC this morning until right before the open, when we got that weakness and we saw a gap down open was coming. That doesn't mean I'm going to buy first thing. What the setup was daily RSI. We knew we were hitting oversold. We knew the hourly RSI was getting back to oversold. The 4-hour RSI was oversold this morning first thing. So knowing all that, I want to see the 5 and 15-minute RSI get extended. If you've been watching these videos, you know for oversold bounce plays, I want all time frames oversold. So I know that worst case scenario, we at least get a short-term bounce, even if it's not our 4-hour and daily oversold bounce, we at least get a short-term oversold bounce shortly after entry that allows us to position ourselves to have lower risk and to potentially put break-even stop levels. So heading into the morning, I said the first thing on a live stream, I'm not making an entry on CGC unless we break 32. If we break 32, I will enter. So we then started trading in the morning, and we started pulling back, and that's the 15-minute time frame. So here it is on the 5-minute. Started pulling back very quickly, and man, it really happened fast. It feels like a slow-mo in the morning, but we started pulling back, and I'm watching SPY at that point. Very important factor, SPY is coming off the daily all-time high, and we were in hourly oversold conditions this morning first thing. The first time you hit hourly oversold conditions coming off of a massive bull move or all-time highs, you look for a solid bounce. So I'm looking for SPY and the overall market to bounce at the open. It was the same thing. The hourly RSI was oversold, but the shorter term time frames were not oversold at the open until the first 5-minute candlestick. So I shifted my game plan for CGC, and I said, okay, CGC hit the 32.20s. I'm not going to sit here and nitpick over 20 cents. I'm confident that SPY is going to give us a bounce this morning because we're in hourly 15-minute and 5-minute oversold conditions. I'm confident CGC is going to give us a bounce lining up with SPY because we're in oversold conditions on every time frame. So I made my entry in the 32.30s, and I said to myself, okay, I'm in a position now. The bounce, if it happens, that's great. If we do break 32, I will happily load a larger position knowing that both SPY and CGC are oversold on all those time frames, and knowing that it was really essentially the confidence that SPY was going to bounce this morning had me shift my game plan last second and get into CGC in the 32.30s. From there, I exited half of my position on the initial bounce when I hit my daymaker level, which was maybe 7 minutes later, and then I exited the rest of my position just under a 2-day maker, knowing that we were still in an hourly downtrend. I looked at CGC and I said, okay, anything under 33.84 is just an hourly lower high. We're in a daily downtrend, hourly downtrend. I'm playing counter all these trends. I have a 2-day maker staring me in the face. I'm going to take it. And anything that happens after that, I don't really care about because my play is based off of the short-term time frame. My reason for entering was hourly 5-minute and 15-minute oversold. And once that bounce started playing out, those conditions were no longer there. My reason for being in the trade is fading. It's no longer there. So that's when I look to exit. Right now on the hourly time frame, the bulls have to confirm an hourly trend change because that move came all off of the bottom. And we have to see a higher low at 33.10 and a bull break of 34.08. Essentially, any individual name in the Canadian MJ sector that saw an oversold bounce today, and there's a bunch of them, if we do not break the high of today tomorrow, big red flag on the bounce, same old story, bears in complete control. This is an hourly inverse head and shoulders pattern that the bulls are hoping to follow through with, and we need that continuation. If we do change this hourly trend tomorrow, tomorrow's the FOMC. Google what the FOMC is if you don't know what it is. It's monetary policy in the US. SPY, the S&P 500, is going to have a significant reaction at 2 p.m. Eastern. We have to be cautious of potential correlations to the market. So CGC, if we do change the hourly trend, we're going to zoom out and look for a daily lower high. Anything under 36.31 is just a daily lower high, keeping the bears in control. We would have to likely top out compared to that level, test the daily exponential resistance, which has continually rejected the price, form a higher low and then a higher high to change the daily trend on CGC. So step 1, change the hourly trend, then zoom out to the daily, remaining skeptical of bulls, which have not proven anything to us in a while. Cron broke 1391, support was 1351, perfect little bottom fishing play off of that level, solid bounce from 1355, but again, just an hourly lower high. Resistance was 1434. Resistance today, the top of the bounce, 1421. Lower high. Bulls must hold 1355 and break 1421 and 1434 in order to see any kind of shift in momentum. This bounce is proving nothing so far. If we change the hourly trend, we zoom out to the daily and we look for a lower high compared to 1569. APHA. Oversold bounce this morning. It was the leader of the bounce in the Canadian MJ space. The first 30, 60 minutes of trading. Held the low of yesterday. Broke 545, which was the high of the bounce yesterday. And now we have 568 resistance. Bulls are trying to form an hourly higher low at 545. So tomorrow, bulls need to hold 545 and break 568 to get bounce follow through. We would then zoom out on the daily and look for a daily lower high to form compared to 623. ACB, same story. Hourly pullback was significant. This is one of the more significant pullbacks. So an hourly equilibrium is a more likely scenario than hourly continuation. But the bulls have to break the high of today to have any meaningful follow through. It was a double bottom, so there were some nice bottom fishing plays. APHA, ACB, and Cron all held supports and bounced off of those levels. But if we can't change the hourly trend on ACB, the bulls aren't going anywhere. If we change the hourly trend, we zoom out to the daily, and I would consider anything under 746 a daily lower high. So again, these bounces in Canadian MJ are not proving anything to us on the daily timeframes at this point. TLRY, oversold bounce, hourly higher low, dump at the end of the day. So we need an hourly higher low and a break of 41.74 and 42.25 to see any kind of follow through. And then the daily time frame, I would consider anything under 45.48 just a daily lower high. A lot of work on all of these names to see any kind of change in momentum on the daily time frames. CTST, bulls must hold 187, which we did today, and break 240 to change this daily trend for the first time since the bad news. There's more articles on insider selling and all that bad news bears, but we're watching to see, can a shift in momentum take place? And again, it just looks like seller exhaustion. Who at this point has not sold that is bullish, and who is left to go short that has not already entered a short position? That's why these falling wedge patterns exist. And there's a mini one here on the 4-hour time frame potentially, but what I'm looking at on CTST is if we get a daily trend change, it's all about 320. And if we can't break 320, we're not going to get much follow through. So I personally have no interest even if we do hold 187 and break 240. But that would at least be an initial event that would cause some shorts to have to cover. And we'll see if the bulls can pull it off. Hexo. So Hexo, I'm pretty much considering this a double top with the high of today and the high of yesterday. And I'm watching the 4-hour time frame. So we have the low, high of the bounce, and we're looking for a 4-hour higher low to form. And the bulls have to change the 4-hour trend for the first time in a very long time. Has not happened in a while. And again, this daily bounce is doing nothing for the bulls. Daily exponential resistance for 2 months, haven't even touched it yet. Anything under 515, a daily lower high, we're not breaking the daily lower high pattern anytime soon. We have to top out on this bounce, ideally with one more leg up for these bulls to give themselves more space to work with to form a daily higher low and try and get over these daily exponential resistances. I will exit my Hexo position if we do not see any kind of bounce follow through tomorrow. Today was already a little bit of a red flag, and I let it ride out because it's a smaller position. But if we do not see any kind of attempt back into the 440s tomorrow, I may exit Hexo and continue focusing on USMJ. OGI, a little bit of bounce follow through. Bulls have to make their way up over $8 to try and get back to the midway point of this equilibrium. We have the high, low, lower high, higher low. Anything under 906 is a lower high. And again, just looking at the range here, we've got a $1.71 range. So an 85-cent move off the low would put us into the mid-range, the middle, which would be a 50% retracement. That's 820. So the goal for the bulls is to get to 820 to keep this daily equilibrium alive. And we would look for a break next week if the bulls can get a bit more follow through. Hourly support, really anything above 758 would be an hourly higher low. Bulls want to hold 780 tomorrow and break 797 to try and continue this bounce and to tighten up that daily equilibrium. VFF, lead Canadian MJ bull, no doubt about it. Very significant bounce. Daily trend change with this little higher low and higher high and breaking resistance. We're at the highest price that we've seen in a month. How many names can you say that for in the MJ space? The monthly higher low has very likely been set. Look at that bounce off of exponential support. Bullish reversal candlestick on the monthly time frame. As far as the weekly chart goes, anything under 1836 is just a lower high. That's still a ways away. Best case scenario for the bulls heading into the fall, top out on this bounce, pull back for a weekly higher low, and then see continuation and a weekly trend change into September. And that would position the bulls really well if we do see an MJ run this fall. VFF would be set up. T-God got some bounce follow through. Volume's notable. That's another thing that we have to see. If we're going to be looking for shifts in momentum on the daily, we have to see daily bull volume stand out. And it actually does here on T-God. It doesn't on many names. Anything under 330 is just a lower high. But this is a scenario where there's inverse head and shoulders potential. With our left shoulder, this is our head. If we don't break 330, we have to pull back and form a daily higher low and then change the daily trend. That's what the bulls are hoping for heading into the first week of August. And it's a possibility. The more bounce follow through we get, the more space the bulls have to form that daily higher low. VGW double bottom, 360 is key support. Bulls have to break 397. The defense of 360 fended off the bear flag on the daily for now. And now we have to break 397 to see that shift in momentum. If we can't break 397, we have a 4-hour equilibrium to be watching. So now on to the US MJ sector. OH with a big move. I was loading up a bunch of OH today in a couple accounts. Reason being, number one, it wasn't seeing a bull move. And I was looking for it to be a potential laggard. That's why I made my initial entry sometime in the last 2 days. I think 2 days ago is when I entered initially. So that was one reason why I entered one position. Why I added a lot more today was, first things first, the bear break with no follow through. The hourly, very contained chart with clear resistances. The bounce across the sector, adding a bit of fuel to bulls across the sector. And this hourly 12 and 26 period moving average. It was on the verge of crossing bullish before we broke lower high resistance And that would be the first time in 3 weeks that that has happened. So I was a buyer today. I bought in the TCG account, I bought in my personal account, and I bought in a friend's account. And one thing to note is when buying pressure comes to this sector, when we're thinly traded on the OTC, it is going to move fast. And OH is a perfect example today. But my example is I bought OH and I bought the US ticker ORHOF. And earlier this morning, I bought 10,000 shares. And at that point in time, it was 10% of the total daily volume. So it was a decent sized order compared to the low volume day that we were seeing. I did a market order and it took 8.5 minutes to fill. Let that sink in. I've never seen it take that long in my life. 8.5 minutes, one market order for 10,000 shares, which, yeah, it's a decent amount of money, but grand scheme of things, stock market, that's not much money at all. So if there's an influx of any kind of news or anything in this sector, and you get a lot of buyers competing for shares in the OTC names, the thinly traded names, that's why we can go 10% in one day just like that. And the volume wasn't even that impressive on the bull move to get this key bull break. It ended up getting impressive, but at least initially, the volume started picking up, but we're looking at $150,000, $200,000 moving the price. Let's see, these two candlesticks, total volume, we'll round up, we'll call it 40,000. $280,000 of volume moving the price 6%. That's huge for a small amount of dollar volume. Another reason why I was focused on OH is the potential positive overhang of headline news. We're in a sector right now where negative news has been an overhang. The positive potential news is if we get DOJ confirmation of a deal. Before today, the premium that OH was trading at, meaning the discount, where if the OH and CL deal goes through and CL buys OH shares would be worth 38% more than they were today based on today's or yesterday's price of CL. And it might be a little bit off, but 38%. So what that means is as soon as if we get approval, if that headline were to come out, we would see an instant 20% move on OH to catch up and to shrink that premium. The premium is there because number one, opportunity cost. You have to have your money sitting in OH while you're sitting there waiting for the deal. Number two, the Department of Justice has to approve it. We don't know when that's going to happen. We don't know what the exact details they need are. And it's an ongoing process and it's a slow process. That's why the premium's been so high. Today, OH went 11%, CL went down 1%. That premium significantly shrunk today. So if it was at 38% yesterday, it's now at 26% or something much lower. So I was of the mindset, man, it would be fireworks if we got a sector shift for the USMJ sector to see some bounce on the weekly time frame, even if we're just going to set weekly lower highs. If we get some bounce in the weekly time frame, and if we were to get DOJ approval of this deal, OH would go 50% essentially in 1 to 2 days. Now, that's a big if the approval goes through, but that was just an added possibility that made me willing to add a little bit more risk and take a position in OH. So another position that I took today in OH was right here. I was buying into resistance to try and break this resistance because I saw the hourly shift, and if we broke 380 or whatever that number was it 680? 680 and 690 on OH, that would be a clear bull signal. Shorts would cover, bulls would go long. So I was buying again. So here was my strategy. I had a position previously. I added to the TheChartGuys account position. I added to my friend's position all before the hourly break took place. So then I'm saying, okay, we need this hourly break to take place. The resistance level is very clear, and this is some of my volume right here. I was buying resistance of 513, and I got filled at 513, and at that point, now my position is bigger than I want it to be. But I was using that buying power to push the bulls. Come on, let's break this resistance. We got some volume, let's do it. And I sold 5 minutes later from 513 to 546 or so, 544, something like that. So that's essentially me taking having my position that I'm going to sit on and ride out, and then adding more than I want to have, but knowing that I'm going to flip it right after breaking resistance. And in this instance, it worked out perfectly just because we did get significant follow through on the resistance break, and I was instantly able to lock in that move. And now essentially that lowered my break-even point on my ORHOF position of what I have remaining. That dropped it down to like 475. So I could put a stop loss. Well, I can't because it's traded on the OTC, but I could set a stop loss manually because I'm always watching on the computer under 488. I could put a stop loss at 485 and still have profit on that trade or those two trades. So it essentially is a zero risk trade at this point unless we gap down on big bad news, which is always a potential risk. But it's just using that second position, knowing it was a day trade position, to lower cost basis and help get that break and help increase the value of all those other positions. So my game plan from here is how much follow through can we get? There was also some notable shift of one of the big firms selling CL and adding OH. And that showed us that they were exchanging their shares for the potential arbitrage opportunity of the premium value of the OH shares. So the key resistance for me is $6. Let's go back to OH. Key resistance for me is 783. If we break 783 tomorrow, it's party time. If we don't, inverse head and shoulders, where we will have our left shoulder, the head. This video is way too long. Sorry about that. Then we need to see if we cannot break that resistance of 783, we need a little daily higher low, and then we need the daily trend change. And that would be notable. That would get us over the daily exponential resistance for the first time in 2 months. Again, all these things that just haven't happened in so long, like 3 weeks without a bull cross of this moving average, which is now crossed bullish. Show me some follow through bulls. Give me 2 green days in a row. Give me some increasing bull volume. Give me something. We'll see. But again, now that I'm comfortable in this position, I can let it play out and hope to nail a monthly higher low. We'll see. CL, just wanted to show that CL wasn't doing anything, and it was red today. That's why the premium shrunk so much today. IAN. IAN closed at the high of the day. There's a very key resistance on the US side. And look at the volume here. There's clues you can get by looking at different, whichever side of the border you're looking at. But looking at IAN on the 5-minute time frame this morning, or today, this afternoon, forget what time I'm looking at here. But essentially what I wanted to point out is that the volume on ITHUF was notably higher right here. So notably higher after 2 p.m. But look at this resistance. Tops at 273, 273, 2725, 272, and we close the day at 272 resistance. So clearly there is resistance at this level, and there was a lot of selling going on. It seemed like the price was being kept contained intentionally by how much selling pressure was occurring at that level. But if you added up the share count here on this period where the bulls were attempting to break that resistance, that's 25, 35, about 96,000 shares traded, and you go and look at IAN at the same period of time, and it's way less. You're looking at less than half of that. That tells me that number one, there's a lot of volume on the US side and not on the Canadian side. And number two, that wall of resistance, which is very clear on this 5-minute time frame, is not clear on the IAN side of things. 355, we broke it to get up to 357, just not the same line in the sand. So that tells me that there's probably someone on the US side of things either offloading a significant amount of shares at 272 or trying to keep that price contained from breaking that resistance level. So looking at the daily time frame, again, this is a falling wedge. I forgot to point out who is a falling wedge. There's a whole bunch of them. MRMD, who we don't cover a lot, is a daily falling wedge as well. That's worth watching. I'll look at that in just a second. So depending on how you draw this, you could say the falling wedge is just breaking bullish. But again, if I were to use the upper wicks, we would just be underneath it. So again, that's why I don't like trend lines too much, because every analyst would have different trend lines wherever, depending on how they draw them. Bottom line is, I need to see a break of 376 and 395. Break those levels, and I'll say there's the shift, and finally getting over the daily exponential resistance for the first time in 2 months. And it would be a 4-hour inverse head and shoulders pattern if the bulls are able to pull that off over the next couple of days. Inability to break 395, pulling back for a right shoulder to form, have to break 376 and 395 for the follow through for that shift in momentum. So falling wedge on IAN, daily time frame. MRMD, again, falling wedge. Wedges are probably the most recent pattern that I started using in my trading career, and I like them. It just shows exhaustion. And again, it's not an act now signal, it's a watch for the shift in momentum signal. And it would look like that for MRMD. Again, you get to a point where you either see a clear bear break, and of course you can break bearish from this pattern. I have seen it before, but generally speaking, it is a bull reversal pattern. So keep an eye on MRMD. If the bulls can hold 121 and break 150, that would be the start of a shift. It's the same daily exponential resistance for 2 months as everybody else. So many similar setups, just waiting for that flip. The switch has to flip, and it hasn't happened yet. CWEB, very impressive day. Today alone increased the odds for me very significantly that a weekly trend change will take place. If today was a red day, then it would be anybody's game, and we could say, well, we might see a weekly equilibrium now, but this move today increases the odds of a weekly trend change, and no other USMJ name is better positioned. Pretty much every bounce, if we get this daily shift that we're looking for, and those daily falling wedges break bullish, we're just zooming out and looking for weekly lower highs. But CWEB is a name that has already seen its weekly bounce and consolidation take place. It's a leap and a bound ahead of everybody else for changing longer term trends. So again, even looking at OH, 1 day of a bounce, we're just looking for a weekly lower high compared to 955 if we do get follow through on this bounce. So CWEB, impressive. If we lose the hourly uptrend on CWEB, which right now anything above 2106 is an hourly high or low, when we lose the hourly uptrend, we're just going to look for a daily high or low to form. And the question is, are we going to lose the hourly uptrend before or after breaking 2449? That is the level to be watching. Monthly high or low on CWEB, has it been set? Absolutely. Now the question is, are we going to set a monthly lower high compared to the all-time high and see a monthly equilibrium play out on CWEB into 2020? That remains to be seen. Curaleaf, double top at the high of today. Pretty much the same range as yesterday. If we break the low of 1029 and 1030, I will be looking at this as an equilibrium. It's not ideal shaped because of the news that came out, but we have our high, low, lower high, and I'd be looking for a higher low if we break that inside bar bearish. If it breaks bullish, we're looking right up at 1103. The daily trend change will be underway, and we'll be looking at a weekly lower high to form compared to the all-time high. So essentially how this candlestick breaks tomorrow is going to dictate either tightening range or continuation of the bull move. TRUL, again, inside bar on the daily. I'd love to see a bear break of the daily inside bar, and I would be looking to begin scaling in, making a play off of the low and looking for the right shoulder to form. And then looking for that daily trend change. So we'll see if we get it. We'll see what consolidation looks like. Increasing bear volume would be a red flag. You can see the increasing volume started here for the bears as we drop to lower lows. Have to form a higher low and then break the lower highs. And we're at a point now where I'm seeing enough signs of seller exhaustion that that's why I want to enter on that daily higher low. GTII, same thing. We have so much space to work with before our low of 1139. We can be looking for the potential of a higher low to form, but the bulls would have to hold 1139 and break 1368 to change the daily trend. And this is another one where you could draw a falling wedge on the daily chart. We did close at the low of the day, so there's no indication that our daily higher low is established yet. That's the one thing I don't like about this setup and why I'm choosing TRUL to scale in over GTII. if we do get the setup that I want, I need to stop talking, do good things, recycling a video from, again, Airlie Gardens in Wilmington, North Carolina. Botanical Gardens, we'll go over what I've been planting tomorrow. Have a good day. See you next time.